Whew! What a week so far, huh? So far, the week has been pretty negative. A lot of big earnings coming out, a lot of negative, and portfolio's going down a little bit this week so far. But I hope everybody else's portfolio is doing a lot better than I am right now. Today, we're going to take a look at the top 5 dividend stocks that I hold in my portfolio that don't necessarily have the best yield, but they are some of my favorites, and maybe they'll be your favorites too. So why don't you stay tuned and check it out. What's going on, everybody? Matthew Winters, and welcome to my channel, and actually welcome to my first video ever for this channel. If you're here, basically it's really just about entrepreneurship, investing, and flipping for profit. Me personally, I've been making my own paycheck for about 12 years now. I've been investing for 12 years now. So really this channel is just to give you some tips and tricks. If you're starting a business or you're looking to start a business, I've started a couple myself. So really here to give you information on how to do that, as I think I do it pretty well. Also, I've been investing since 2008. So I'm going to show my portfolio and show you how I invest and why I invest that way. And then flipping for profit is, I've always been a buy low, sell high. I started making a living off of Craigslist, buying and selling ATVs actually off of Craigslist, and I was making 6 figures a year from that. So and I built that up, and I started other businesses. So basically that's what this channel is going to encompass. So I really do hope it does help you. I'm going to show you my trials and tribulations. I'm going to show you, like I said, tricks that I've learned over time, and things to avoid when starting a business or when investing. So today, actually, what we're going to do is we're going to take a look into my portfolio, my Robinhood portfolio, and I'm going to show you the top 5 dividend stocks that I hold that I enjoy the most, and maybe you'll enjoy them too. So just really quickly, I am a dividend investor. I'm a long-term investor. I don't day trade, and for the most part, I don't swing trade either. But that might happen here and then, but for the most part, I am a long-term dividend investor. For those of you that don't know what that is, dividends are kind of like an interest rate. You put money in the bank, they pay an interest rate. So dividends are kind of the same way. You invest into a company, and for that amount of stock or whatever amount of stock you own in that company, you get kicked back a dividend each month or each quarter. So basically the end goal for me is to build this portfolio until I retire, and then possibly maybe live off of the dividends each year, because you can get a portfolio and make $40,000-$50,000 in dividends a year. So I mean, you're just sitting there collecting basically a salary for having your investment. So again, you do need quite a bit of money in a portfolio to do that. But again, that's what I'm showing you. So we're gonna go through my portfolio, and I'm gonna show you what I hold in my portfolio. And then definitely, if you're looking at these stocks, you definitely want to do your own research. Okay, you don't want to listen to what I say and what I'm buying, because I'm just a guy on the internet, kind of showing you his portfolio. So make sure that whenever you're investing, always do your research, and always make sure that it's something that you feel good about jumping into. And if you're a long-term investor like me, make sure you're using money that you don't immediately need, because I'm putting this money into these accounts, and I'm not touching it. I'm not touching it until I retire. So or hopefully that's the plan anyway. With these markets these days, it's pretty turmoil out there. But I am holding, and I am staying long, and I'm continually put money in. And that's just how you build a retirement portfolio. And you may ask why I use Robinhood. So I actually have 3 investment accounts. Okay, so I have a Roth IRA that Ameriprise handles. I put money in there every month, and I just let them do their thing. It's tax-free. I also have the Robinhood account, which I started to basically go with this channel. So we put some money in there, and I'm really going to use it as kind of a retirement thing, and to really easily show you guys how simple it is to invest in the market, start getting dividends, and start trying to make a retirement portfolio down the line. I'm 38 right now. I've been investing for about 12 years, but I've really got serious about it over the past couple of years. So my other account is my Fidelity account. which I do keep money in there, but that's more of if I want to sit down for the week and I do want to do some day trades or something like that, or I want to do some swing trades. That's typically the account that I'm going to use. I mean, Robinhood is an awesome account to start, but it's really, if you're looking to day trade on that account, it's just, you just can't do it. Swing trades is possible, definitely, but I look at Robinhood as an account where you want to use it to invest in for the long term, and that's why I think it's great, because it's very user friendly. We can go right on there and I can show it to you guys. You know, and like I said, when I buy stuff on there, I buy it to hold it for the long term, so it's not like I need to get it at the perfect rate. You know, if you're day trading, you know, pennies, cents, nickels, those are huge in the end if you're buying a large position and then looking for it to swing a little bit and then getting out of it. So you need to have a pinpoint time of when you're buying and when you're getting out, and it's also smart to use moving averages and candles of graphs like that to know when to enter and when to exit. So Robinhood's definitely not a day trading app, but it's definitely good for swing trades and for long-term investment. And that's really, like I said, what this channel is about, is really about the long-term investment and, for the most part, dividend investing. Now, when I say for the most part dividend investing, my Robinhood account is probably like 70% dividends, and then 30% is either speculative, or it's holding companies that I still enjoy, that I still like, that may not give dividends, or they've recently cut their dividends or removed their dividends totally. So, I mean, we're in very interesting times where companies are starting to cut their dividends to save cash, and that just makes sense. I mean, they have to do that. I mean, when we're in a great economy, you know, dividends are, a lot more companies are offering their dividends. They're not cutting the dividends, obviously. So, you know, it's a little bit different right now in the time period we're in. But there's still companies out there that are still paying their dividends, still increasing their dividends. You just have to find them, and then you have to choose whether or not you want to invest in them. So when we jump into my portfolio and I show you the top 5 dividend stocks that I have and that I enjoy the most and that I like to invest money into, just keep in mind, there's other stocks out there that will pay a higher dividend yield. There might be other stocks out there that are more safe. The good thing about Simply Safe Dividends is they actually assign a dividend score to each company, and it's a safety score. So 99, 100 is like very safe. You know, there's no foreseeable future of them cutting dividends or removing them at all, right down to basically 0, which is unsafe. You know, and they've got 50 is like borderline safe. So again, a great program to look into the stocks that you're thinking about investing, especially for dividends, and you can kind of research them there and see what they think and how safe they think that that stock is with their dividend. Now, I'm obviously not sponsored by Simply Safe Dividends. It's just a program that I use, that I enjoy, and I think it is an absolute must tool when it comes to really getting serious about investing and being a dividend investor. So anyway, why don't we just go right to the computer and take a look at my portfolio? All right, guys, so this is my Robinhood portfolio. As you can see, we've had a red day today. We're down 1.46%. About $530, $544. We are in trading hours right now, so you will see that fluctuate. Yeah, so this is the Robinhood account. So I have over 60 holdings, 60 something holdings. And as I said before, for the most part, I am a long-term dividend investor, but I do still hold not only companies that have cut their dividends, like some of the airlines, but I also own companies that don't offer dividends, period, like Alibaba, and some real speculative holdings too in the marijuana sector. So I do like to have a little bit of everything, but like I said, predominantly, mostly, I am a dividend investor, but I do hold a little bit of money in speculative things, and I still hold companies that cut their dividends, or they're not, or they don't pay dividends. As you can see, it's quite a bit. I actually do own a little bit of cryptocurrency too, but that's something else for another video. But yeah, so basically you can see here all the holdings that I have. Now again, like I said, maybe 60-70% of them are the dividend stocks, and then the other 30-40% are more speculative, or companies that have cut their dividends and I'm still holding on to them, or companies that don't offer dividends, period. So you can say, today it's been a red day. If we look at the week, I'm down, $2,100 for the week. It's been a pretty bad week. And then if you look at the month, I'm still up for the month. So I'm up $700 a month, up 2%. So that's not too bad. But like I said, this is all about long term, guys. We're putting money in each week or each month or whatever. And we're trying to buy and hold. And we're trying to buy good blue chip stocks, companies that have been around, companies that have uninterrupted dividends, and that are paying a decent dividend yield. Now, if we look at my account and go down to the history here, so you can just see right here. So you can see the upcoming dividends that I have pending, which isn't bad. But as you grow and grow and grow, and keep on, if my portfolio was 100% invested into just dividend stocks, you would see a lot more dividends, obviously. But like I said, I don't like to have all my eggs in one basket, and I still think that you can do well with a dividend investment, doing about 70%, and then the other 30 is being speculative or whatever you want to do. So today I didn't really do much here. Earlier today I did pick up UGI and RGA, which are RGA is a holding company, and they're basically insurers for insurance companies, right? So they're reassurance is what they are, but they do have an excellent dividend yield, and they do have a excellent dividend score. So they were down, I think, like 8 or 9% today. So I ended up picking up just a couple shares. So the other thing is, you may see that I don't buy a whole lot of shares, and the reason for that is because I also like to dollar cost average. So when I enter a position, I do what's a feeler. I buy a few shares. And then over the course of a week or a month or whatever, if it goes up, I tend to leave it alone. If it comes down, then I add a little bit more, and I add a little bit more. I think that's the smartest way to do it. And usually I don't really buy, I never will buy the top. And I don't buy into holdings that have, increased over the past week. They're up like 10%, 15%, whatever. I try to buy them when they're down 5-10% over the month. And that's when I like to enter. Sometimes it works out and sometimes it doesn't, but for me, that's what works out, and that's what I like to do. The other buys here, so like Omnicom, the OGE and General Dynamics, basically those were just dollar cost averaging, just bringing down the price of where I entered. And basically every morning what I'll do is I will look at my portfolio and I'll see what's down the most, and I'll see if it's possible for me to enter into dollar cost average down that said holding. So some of these were down enough where I said, okay, maybe I should buy just a couple shares to bring the cost down a little bit. And usually, like I said, I do about a 4 to 5%. And when it's down that much off of what I entered, I'll usually pick up some more. And depending on how I feel about the company, maybe I'll buy more or I'll buy less. But I always tend to try and dollar cost average holdings I have as opposed to entering new holdings. So if we go over to Simply Safe Dividends, so this is, if you haven't seen it before, this is what it is. You input all your holdings. You can see here, these are my holdings. Quite a few of them, all right? So you basically input your holdings, and then it gives you a ton of information. It updates your income, what you're going to get per year, obviously your portfolio, what your dividend yield average is, which mine, again, is pretty low, but it's not a 100% dividend portfolio. So I have other companies in there that I'm holding that don't pay dividends, and I don't just invest into the highest dividend yielding stocks I can find, right? I mean, I could invest in some REITs that are paying 18%, okay? But their dividend's very, very unsafe, and I don't know how long the dividend's going to be around. So why would I want to jump into a company like that and then have to move the portfolio around, if they cut their dividend or they lose their dividend, right? So to me, it's not all about the dividend yield. It's a mixture of both, being a safe dividend score and having a decent dividend yield. So if we look at like my holdings by dividend safety, the yields are not huge. You can see like right here, Apple, it's a 99 score, which is very safe, but it's only a 1.8% dividend yield, right? Now, if we go down and we get to some of the ones that are a little bit more choppy, they have a little bit higher dividend yield, but they're pretty borderline, okay? And then I think even, some of these, so like RQI, it's a 10% dividend yield, but it has no growth, and I think they cut dividends, or they just cut dividends. A couple of so I hold WestRock, right here, WestRock Company. They just cut their dividends, so that's something that I definitely need to look at. Now, again, I don't have a huge, position in it, and I don't get it's not a huge amount of money per annual income, but these are some things, and this is the other great thing about this program is it always will send you an email saying, that they've cut their dividends or they're looking to cut their dividends, so you don't need to keep an eye on every single individual holding you have. They make it very easy. And I think it's a great program. So now, if we go by dividend yield, you can see some of them, like EPD, which is in the energy sector. They have a 10% dividend yield, and they still have a 65 dividend score, which is pretty safe. I mean, to me, that's pretty safe. I do not have a whole large amount of holdings in that company. But again, I think I just entered this company maybe a few weeks ago, and it's just something that I will dollar cost average and keep adding to if I feel it's a company that I want to keep putting my money into. But if we go by my annual income, I tend to put more money into the companies that I enjoy the most, that I think are the safest bet. Now, we look at my top 5 here, and you can see they're pretty darn safe: 97, 99, 80, 86, and a 61. So General Dynamics is one of my favorite companies to put money into. They are a defense and aerospace company, which I believe in, because they hold contracts. They hold government contracts, so they're getting their money no matter what. They have a decent dividend yield, but they're very, very safe. Very, very safe, and they also have a growth of 8%, so it's a pretty fast dividend growth. And I make $75. By holding 17 shares, I'm making $75 annual income. So, I mean, that's pretty reasonable. That's definitely pretty reasonable. The next one is NextEra Energy. They are one of the largest power suppliers. They are the largest power supplier in Florida. And since 2010, they've actually been really pushing and getting into the green energy sector, which I do believe in and I agree with, and I think they are just a great company. Again, very, very safe dividend score, a decent dividend yield. They have a 12% growth, which is very fast, and they, so I do invest in them, and they do have a pretty large part of my dividend annual income. Next one there is Coca-Cola. Everybody knows what that is. Coca-Cola, I think it's a good company to put money into. They have a pretty safe dividend score, and they have a decent dividend yield. They haven't been doing so hot, but it's definitely a company that I believe in. As you can see here, their dividend growth has been slow, but again, they haven't been doing so well. And usually, if a company's not doing super well, they're not going to have huge growth in the dividends. So again, $49 here in my annual income, but it is a good company. Same with Pepsi. I do have some holdings in Pepsi, but I definitely like Coca-Cola. You got the Omnicom Group. Again, communications, I don't have a huge portion of my portfolio in here, only 2.7%, but they do have a very, very good dividend yield. and their dividend safety score is still very safe. 86 very safe, and they have a very fast growth, 8% last year. And they hold, it's about $44 in my annual income. Now, you may think that these are small amounts of money, but they do add up. I mean, these are just, a few holdings here, and you can see, I mean, it adds up. It definitely, I got $900, $908 in annual income. So dividends definitely do make a difference, and I reinvest my dividends, so it goes right back into my portfolio. So not only do I add money each month, I also add all my dividends back in. So it's a great way to grow your portfolio for retirement. And then we've got Magellan Midstream, which they're in the energy sector, and they own pipelines from refineries to end markets, and they also own storage places where people will contract them to store crude oil and stuff like that. So, it's I think it's a great company to invest in if you didn't want to invest directly into refiners or crude drillers or stuff like that. Like ExxonMobil or Chevron, which I do own. They're in my portfolio, but owning the pipelines, to me is kind of like selling the shovels during a gold rush, right? I mean, you need the pipelines, you've got to deliver it. In storage, I mean, you've got to store that crude. I mean, look at what we've been dealing with the past couple of weeks where, we were running out of space to store it, so obviously they were contracted right out. So I think it's a great company to invest in. They have an excellent dividend yield, close to 10%, which is amazing. And their score is safe. It's does it make me feel uneasy being down in the 61s? Would I rather see it at 99? Yeah, definitely. But it's still a safe bet. I have a decent gain on it, so if the score did go lower, if they downgraded the score, I could definitely get out of it if I wanted to. But this is a company that I think no matter what, I will hold on to. You can see it has a 5% growth over the last year, and it has $41 in my annual income. Now, I only own 10 shares in this company, so it's not like I have a ton of money into them anyway. So those are the top 5 dividend stocks that I invest in. Now, I will continue to add money to them, like General Dynamics. You can see here that my gain loss, I am down 6% on that investment. My average cost is $130.23, and the price as of right now is $122.13. So that is definitely something that maybe I would look into to dollar cost average, maybe add, even it out to 20 shares and bring that cost down a little bit, because General Dynamics is an excellent company. It is something that I definitely will put some good money into. The industrials, so if we look at my diversification, my industrials is my largest part of my portfolio, and you can look down here and see that the real estate and the financials are definitely my weakest, and materials and energy is really not that far behind them. So I definitely want to be adding to these guys to get them up. I'd like to be kind of matching somewhere around here in the 10%, 11%. And it's just that tried and true. Don't put all your eggs in one basket. You definitely want to stay spread out. Hence why I have 68 holdings, right? I have 68 holdings, and they are all over the place. They are all over the place. But for the most part, they are blue chip stocks. They are good stocks that I believe in. I have a couple index funds in there. But for the most part, it's a lot of different stocks, some doing better than others. But again, they're all companies that I believe in. They're all companies that I do want to hold on for the long haul. So I don't have an issue holding them. And so that's basically what I do. I want to invest and spread as much as I possibly can. And then over time, I will whittle this down a little bit here and there. As companies that I don't believe in anymore, I will whittle them out, and I will put the money in towards growing this, into more safe companies. I mean, you look here, you can see Apple and Activision, Honeywell, Johnson & Johnson, Merck, Microsoft, Next Extra. These are 99, they're super safe dividends. Now, they're not huge yields, but they're safe. I'm not going to need to move them around. I'm not going to need to sell them and then move into something else. I can just keep investing into them, and then just seeing that that dividend growth happen. And that's what we're here to do, to get for the long term and get this invested. So anyway, the video is running a little bit long. Just wanted to show you, get you guys, it's my first video, so I wanted to get you introduced to my portfolio, introduce you to myself, and to kind of say what I've been doing with my life for 12 years, and where I'm putting my money in the portfolio, especially at during this time where we've seen pretty weird markets. So it's been interesting. It's been interesting. But when you're a long-term investor, it doesn't really matter. You're looking to invest for the long term. And if you're a dividend investor, you're really looking to try to get that dividend yield up as high as you can, safely, so that when you do retire, maybe you can live off of a dividend salary. Anyway, I hope you guys enjoyed the video. If you did, definitely please think about subscribing and hitting the like button. That really does help out. And as always, if you have any questions or anything like that, go ahead and leave it down in the comment section. I will try to answer all questions that I possibly can. If you're looking to get into, if you're looking into this this program that I use, I'll leave the link down below. I'll also leave the link for the Robinhood. So if you're looking to start investing, if you follow that link, get yourself signed up, you'll get a free stock, and I'll get a free stock, and the world goes round. Anyway, why don't you guys trade safe? Take care.